Time now for an in-depth look at the market news today, and for that I'm joined on the line by Dr. Kim Seiwan, Professor of Economics at Ewha Womans University. Professor Kim, thank you as always for making time.
Good afternoon, Devin.
Well, the chairman of the Federal Reserve, Jerome Powell, has warned that the economic crisis we're in is the worst since World War II and that the U.S. may need more stimulus. The Fed, however, is not considering taking interest rates negative. Tell us more about that and what measures you see coming down the pipeline.
On Wednesday, U.S. Fed Chairman Mr. Powell gave a speech about the current status of the U.S. economy. He has revealed a growing alarm about U.S. economy's path ahead, and he described the outlook as a highly uncertain and subject to significant downside risk. Despite warnings of a potential bankruptcies and slow improvements in job market, Mr. Powell said a central bank isn't considering plans to cut federal fund rate, which is base U.S. central bank interest rate below 0%. So that means U.S. Fed will leave its 0% level federal fund rate or key interest rate until the end of this summer.
Meanwhile, the world has been hoping for a U-shaped recovery or even a V-shaped one, but there's talk now of a recovery that looks more like the Nike swoosh symbol. In other words, long and slow. What do you think a recovery will look like?
Yeah, that is very crucial question that almost everyone is interested in. But actually, most of the economists agree that the V-shaped recovery, which indicates economy recovers after the end of second quarter, is not possible. Instead, as you pointed out, U-shaped or Nike logo styled swoosh shaped recovery would be more reasonable scenario. This recovery scenario assumes that recovery starts in the second half of next year, 2021. Even Fed Chairman Mr. Powell on Wednesday's speech also pointed out that recovery may come more slowly than expected.
Well, looking at stocks, Wall Street was down sharply for a second day in a row, the Dow by more than 2%. What's the story in global stocks?
Actually, global investors have been eagerly seeking clues about the potential length and severity of the economic downturns. So Mr. Powell's gloomy speech decreased Dow Jones Industrial Average more than 500 points or 2.2%. And for the same reason, European markets over France, UK, and German markets also dropped yesterday between 1 to 2% level on Wednesday.
Well, now Korea's main stock index, the Kospi, was back up to the 1940 level yesterday. That gain was mostly wiped out today, though. Tell us about the local markets.
Yes, today's domestic market is heavily affected by yesterday's U.S. market drop. Kospi decreased by 0.8% today, and Kosdaq decreased by 0.1%. In both markets, as usual, domestic individual investors have bought stocks, but foreigners sold stocks for today.
Yeah, and foreigners might be pulling out of Korean stocks, but it looks like they're buying more bonds. Last month, foreign bond holdings rose to an all-time high. Tell us about that and why that might be.
Yes, regarding foreign investors' behavior in domestic financial market, we have totally different situation in bonds market. As of now, actually, Korean government bond is one of the most popular assets in global bonds market. The reasons for this popularity are Korean government bonds' high credit ratings, which is simply the best in Asia at AA level, and it pays higher interest than other similar rate sovereign bonds. For 10-year maturity, Korean government bonds pays like 1.4% 1.4% interest, but other same maturity government bonds pays around 0.5% and 0.6%. So because of these reasons, foreigners are holding about 140 trillion won size Korean government bonds as of now, and this is the largest size in history.
Got it. All right, Professor Kim, always good to get your analysis. Thank you for your time today.
Thank you very much.